The DXY rocketed higher last week following bond yields, and this feels like an inflection point for the Forex market. So we have a lot to cover in today's video. I'm going to show you how I'm approaching the DXY, the EURUSD, the pound, the dollar yen, and also gold for the week ending April 19th, 2024. Now, before we get into today's video, I do want to mention that if you guys want my help with your trading, come over here to this page. So click on the link at the top of this video. And if you sign up to my preferred broker and deposit a minimum of $100 plus trade at least one lot, you are going to get a 30% deposit bonus plus lifetime access to our VIP group. So if you deposit $1,000, you're going to get a $300 bonus, plus you're going to get lifetime access to our VIP group. So it's kind of a no-brainer. And in the VIP group, I am in there every day. So it's in Discord. You're going to get daily videos, my help with your trading, see my trades in real time, plus get access to the course that's coming up next week. Now, if you live in the US, unfortunately, you can't sign up with my preferred broker. So for those of you in the US, or if you just don't want to use my preferred broker, what you can do is click on the link at the top of this video and get 80% off lifetime access to VIP. And even if you just stay in there for 1 year, it's going to be less than $1 a day. All right, so be sure to check out the link in this video, or if you're on the website, click on that broker link at the top or the trading group at the top if you just want to pay outright to get in. All right, so looking at the DXY, guys, let's get into this. We do have the market, surging higher at the end of last week, and this was very much the dollar following bond yields higher. So what we talked about last week is the fact that we had the US 10-year bond yield breaking out 2 weeks ago. So if you'll notice here, right, for the US 10-year, this 4.335% level, this was broken a couple of weeks ago. All right, so this is the weekly time frame. And when bond yields were doing this right here 2 weeks ago, the dollar, the DXY, was still doing this. It was still pulling back and consolidating. So this move right here was very much the US dollar playing catch up to bond yields. And the reason this matters for the Forex market is if you compare the US 10-year yield to the DXY, they are nearly perfectly correlated. Okay, so that's why we're seeing the US dollar surge, or at least we did see at the end of last week, because again, the dollar was following bond yields. So for the week ahead, what this is going to come down to is the 106 area for the DXY. So if we look at the weekly chart, this shows it really well in that this up here, okay, was the previous range high for the DXY. Range lows down here. You can see we got a sweep of those lows. This became a failed breakout and a rally. This up here became a failed breakout as well and the pullback. So we know that this little pivot through here, okay, right around 105.8, but as high as 106.15, this is going to be critical for the DXY ahead. Now, this is a big weekly candle. And oftentimes when you get a candle this large, you do get a pullback in the week ahead. So keep that in mind, that timing is still critical. Even though I think we do see the dollar head higher, this up here is not where you want to be longing the dollar, in my opinion, especially when you look at the EURUSD that also closed at support last week. Okay, so we could get a pullback here for the DXY. This close right here was too close to call it a breakout. So looking at the daily chart, if we do get a pullback for the DXY, then we are looking at this 105 area. Now, this is also crucial because as long as the DXY is above this area back here, I do favor buying dollar dips. And that's also true for the US 10-year in that 4.335% level. As long as this is above this area back here, okay, this level right here that it reclaimed 2 weeks ago, as long as this is holding, I favor buying dollar dips. And especially when you consider this channel that has developed right here in this reclaim. So this reclaim tells me that the most logical point for the US 10-year yield to target is going to be this 5% level and potentially even the top of this channel. And that could be significant because, like I mentioned last week, guys, this portion right here that we saw, if we get something similar for the US 10-year, this portion back here, right, this move is when the DXY did this last year. Okay, this incredible rally that we saw from the dollar is when the US 10-year yield was moving to test the top of that channel. So if we get a similar move, right, and the US 10-year yield tests the top of that channel again, then we are potentially looking at a very similar rally for the US dollar as well. But again, timing is going to be critical because right now the market is sitting right there in that weekly pivot right around 106. All right, so next up, let's take a look at the EURUSD here. And before that, let's take a look at the calendar on the Forex Factory website to see what we're dealing with next week. Now, most of the event risk next week is going to be kind of front-loaded between Monday and Wednesday. So you can see here on Monday, Tuesday, and Wednesday, we do have significant event risk everything from the dollar to the Canadian dollar to the pound. And then on Thursday and Friday, it does get a little bit lighter. However, keep in mind that a lot of these moves, okay, are inflation driven and also geopolitical driven, especially when we talk about gold. So even though Thursday and Friday next week could be a little bit light on the calendar, it doesn't mean that markets are not going to move. Okay, so looking at the EURUSD, this is what I mentioned a couple weeks ago. So you can see here that this is one big range for over a year now for the euro. And what you can notice back here is that the euro is putting in these higher lows, okay, and higher highs. Now, this trend right here changed with this low. This was a lower low, even though the market was still range bound. This up here was a lower high. So we had a slight trend change here, even though the market was ranging. So that's why right now we are seeing the market starting to break down. This is what I talked about a couple weeks ago, that the most logical place for the euro to head, okay, was down here toward these lows, just given that slight trend change that we've seen here over the past 7 or 8 months or so. Okay, so, right now for the euro, we are looking at it breaking down, and we can see the same thing here for the euro index. So we've talked about this at length as well, where looking at the weekly chart, you can see that we do have a very clear trend line off of the lows from back here in 2022, these lows through here, this low, and we have the breakdown and retest. So we've talked about this as well, and this kind of tipped you off to a euro pullback because the euro index was breaking below that trend line back here. Okay, now if we look at the euro USD, it was still very sideways. So when the DXY was breaking down, the euro was still doing this. Okay, so the DXY was kind of telling you that a move lower for the euro was likely. And that's what we talked about on this website and YouTube channel. Now looking at the euro, this is why I don't favor longing the US dollar to start the week, or at least I want to see the first 24 to 48 hours of the new week to see how this is going to pan out. Because if you look at the weekly chart, you can see how the euro USD ended last week right at support. So we've got this low right back here. All right, so this low, we've got this high and some lows, just above that mark. But this area right around 1.0635 is going to be support for the euro. And, again, we can see the same thing on the DXY with resistance up there around 106. So the market could bounce from here. It could break down from it. But this is a case where I want to see the first, day or two this week, just to kind of see what we get, because this little pivot back here is not, in my opinion, where you want to be trying to short the euro, because it did end the week right in that zone. Okay, so the most logical place, even if we take a look at the EXY, right, the most logical resistance here is going to be these lows right back here. All right, so notice how we have this low, we've got this one and this one here. Now that's at 107.3. Okay, so if we look at the euro USD, that obviously lines up with this area around 1.073. Okay, and we've seen a lot of action around this area too, right? We have this pivot, this high up here, this low, we saw the failed breakout and rally, and this low here. So this is going to be critical resistance now for the euro. As long as the market is below this level, then I do favor shorting the euro on strength. But the key there is strength, because timing is key, right? So we either get the market coming up here to retest this level, looking for shorts, or we get, a smaller retrace up here, and then we see the market break down here, and that could also be a short opportunity toward these lows back here around 105. All right, so either way, guys, I do think that we see lower here from the euro, just given this broader range, and also that change in trend that we talked about based on this lower low back here and also lower high. So I think we eventually see a run down here toward 1.05 with 1.073 being resistance. Just keep an eye, though, on this support area this week where the euro closed, because I do think we could see a bounce early next week. All right, so next up we have the pound. And I know this video is going to run a little bit longer, guys, but it is because we have so much to cover, because, again, I really feel like these markets are at an inflection point that we have not seen for months. Certainly this year, because 2024 so far has been very choppy for these markets, and I do think we're starting to see some trends develop. So anyway, looking at the pound here, we do have this channel we've talked about. Now, I've removed the other channel that was on my chart because it started to break down through this area so much that it really just kind of added, little value to the chart, and I don't want to confuse you guys. So looking here, we do have the market breaking down back here, and this is kind of a similar situation to what we saw on the euro USD, where we did get, even though the market has been very range bound, we do have a change in trend back here where we got a lower low back here, right? And lower highs based on this one back here. So we do have a change in trend for the pound overall over the past year plus. So looking at the pound, we know that this move above 1.28 recently, this was a liquidity sweep. Okay, so you can see the high back here in December. We got the close above, close back below, retest as new resistance, which, by the way, guys, the course that's coming up next week that I'm launching is going to teach how to trade stuff like this right here, how to trade away from fake outs like this, and get short at levels like this and ride this move down. So that's what the course covers. It's honestly my go-to setup, and it is also a very high probability. Okay, so looking at the pound now, we obviously have the market below 1.25. So for a long time, we've seen this market range between 1.25 and 1.28. And last week, obviously, has the market trading well below that. So for the week ahead, we've got resistance coming in now down here, right at these lows and highs, right around 1.2495. But we've also got these lows back here, right around 1.2535. So we can say that this entire area now flips to resistance for the pound. If this is going to turn bullish and this becomes a fake out, which it could, we don't know what's going to happen in the future, right? If this were to become bullish and this becomes a fake out, the pound would have to close back above both of these. So we would have to see a close back up here for this market to turn bullish. But as long as this holds, it's going to be key resistance for the pound with focus on this pivot down here, right around 1.2375, followed by potentially this area around 1.22. Okay, so, bearish breakdown last week. You do have to be careful, though, and this applies to all these charts we're talking about today, just because so far this year we have seen a lot of failed breakouts. So just like this one back here, right, there is still a chance that this down here could be a failed breakout. The same thing with the euro. But like I said, the market would have to trade back up here on a daily closing basis to confirm that. As long as the market is below 1.25, I do favor looking for shorts here for that move lower. All right, so next up, let's take a look here at the dollar yen, which is trading above 152 for the first time since 1990. So a very, very long time since the market has been this high. And the one thing you do have to be careful of, though, is obviously BOJ intervention, Bank of Japan intervention, just because with the yen weakening the way it is, breaking below these, multi-decade levels, you do have to be careful with that because at some point we know that the BOJ is going to intervene because they love to do that. So looking here at the dollar yen, we have it above 152, and we also have the confirmation of this ascending triangle that we've talked about for a long time, right? So this is something we've known is here on the chart based on this level back here and also these higher lows that have been intact now for years. Okay, so with the dollar yen above 152, this area obviously flips to new support, which we've obviously not had a retest of yet. So we could still get that, right? Because we do still have a slight imbalance from this breakout candle, right? Based on these lower wicks here. The one thing you do have to be careful of again, too, though, is that notice how on Friday, the market basically closed right where it opened. And that's because we did see some yen strength develop based on the moves on Friday. So this was kind of a wash, right? We saw the DXY surge on Friday, but the dollar yen kind of just fell flat here. But it was also kind of leading the way with that breakout candle. So 152 becomes support, and the resistance area for this market, we have to go all the way back to the 1990s to find 155.6. So I've talked about that before. This was a pivot back here in the 90s. So this is going to be resistance. I also think that there's a decent chance we see the BOJ intervene somewhere in this area. All right, so we've got support down here, 152, resistance up around 155.6. Now, the thing you have to be really careful of with the dollar yen, apart from the BOJ, is looking at yen futures, okay? So let's take a look at this chart because this tends to move inversely to the dollar yen. And we've got this low from back here in 2022. Now, we've also got this low here. This one didn't quite retest, and we have the breakdown. Now, the reason I'm bringing this up is because this level right here actually comes in, okay, a little bit closer than 152 on the dollar yen. So notice how on Friday, this was nearly a retest. Okay, and the reason that this is going to be significant is because if we see the dollar yen come down here and give us a 152 retest, okay, give us a full retest of this, fill in, this imbalance from this breakout candle, and give us a full retest down here before moving higher or even below this before moving higher, what you have to be careful of is if the day were to close anywhere down here, then it could mean a bullish reclaim from yen futures, right? Because again, the market is a little bit closer to this key level, which again, that's the 2022 low for yen futures. So if the dollar yen gives us a 152 retest, be really careful. Keep an eye on yen futures with regard to that 2022 low. Because if this market were to close back up here somewhere, then this down here becomes a failed breakout. And we all know that that likely leads to a move in the opposite direction, which could be lower for the dollar yen. Okay, so just things to keep in mind here if you are trading the dollar yen, and especially if we do get a 152 retest. But as of right now, we have to go with what's on the chart, not what we think might happen or what we want to happen. And right now we do have a 152 breakout. So support down here, resistance up at 155.6. The only way this turns bearish is with a daily close back below 152. But as long as that's intact and as long as we see the DXY staying strong and also finding support, then I do like this market higher toward that 155 area. All right, and last up we have gold here, which has rocketed higher ever since putting in a new all-time high back here. So we saw in December, the market tried to break out above that all-time high. It did. Okay, this was technically an all-time high, but it failed to close above. We then saw, months of consolidation before we got the real breakout that we're seeing so far this year. Now, currently, the market is finding some resistance up here at the top of this channel. So we talked about this in the VIP group last week before the market retested this. And that's why this move up here you had to be careful of, because upside breaks of ascending levels like this often fail. They often become failed breakouts, what we also call fake outs. And that was certainly true with this move. So you can see here that we've got support down here. Okay, we've got resistance up here. And we saw gold break out above last week. Again, you had to be careful because this looked like a trap. And sure enough, it was. We got the close right back below. Now, do you want to go shorting gold though? That's the question, because this market is clearly in a bullish uptrend right now. And it's also, reacting to inflation, sticky inflation, as well as geopolitical risks. So do you want to go shorting this? And personally, I would not want to be shorting even with a candle like this. And that's also true because this upper wick that we saw on Friday, these typically tend to fill either on the next day or, a few days after. So if we see gold move lower without filling this wick up here, you've got to be really careful, because we could just see a run down here toward the lows, maybe sweep that, and then watch the market come up here and fill in that area. All right, so just be really careful with this. Long upper wick from Friday tells me that there is an imbalance up here that we could see retraced, but this area is also going to be resistance up there just below 2,400. Now, as for support, okay, if we look at this here on the 4 hour, right, here's our channel, and you can see where we do have these lows from right back here that could get swept, okay, right around 2,300. That's going to be support. We've got a little pivot through here. And below that, we have this pivot right around 2265 or so, which also lines up with the bottom of that channel. Now, I doubt we'll see it, get down there that quickly. But this entire area down here is going to be one to watch for a potential bounce from gold. Obviously, a break below that could be bearish and could indicate a larger pullback. But for now, though, again, we do have an imbalance up here in this area based on that move on Friday. So just be careful. We could see a retest up there. This is not something, again, that I want to short just because of the bullish momentum here and with how volatile this has been, because Friday was a 4% move. So you've got to be careful. This is almost trading like Bitcoin right now. So just be really careful with this. Again, not something I want to short, but I do think if we see a fill up here in this area, we could get a pullback down here to sweep some of these lows before a resumption of this uptrend. Subscribe to the channel and click the bell icon for notifications for daily FX videos. Also sign up to Blueberry Markets, deposit $100 or more, and trade at least one lot for a 30% deposit bonus and lifetime access to VIP. Enjoy your weekend, and I will talk to you again on Monday.